Hi, it's 16th of December 2021. So just a quick update. Um, so I'm just going to go back over my notes from a few days ago in the video and also where I think things are up to. Just in terms of the market, I still believe that we're in a sort of amber to red sort of traffic signal. We're definitely not in a double green or green. We came out of a green signal just recently, back in early October, and that's when the number of stocks trading above the 50-day moving average dropped below 20%. So that gave us a great signal to buy. We've moved out of that, and since then we've had the wobbles in the market. So we're definitely not in the easy money stage. Feels like we've been in a bit of a market in decline stage, with some of the sort of super leaders being sold off very aggressively. Capitulation selling, put call ratios went through the roof. Things like VIX, VVIX went extremely high, but probably just normalized a little bit from there. So I think we're sort of in this sort of mid-range sort of market where it's amber, where some stocks are actually holding up pretty well. The index is holding up pretty well. Some others aren't. So my strategy for that is have a low portfolio allocation. I want to be selling into up days or up periods, and buying in down periods. Now, as we go through my trades last few days, I've pretty much done the opposite to that. But anyway, just in terms of, so just backstep a bit, in terms of the psychology of how you sort of typically feel in these cycles, like things are feeling okay in an amber phase. Now, I think we've actually moved a bit beyond that. Things have not been feeling okay over the last few weeks. But saying that, some of the stocks have been doing okay. And yeah, I've definitely been feeling a bit of, I want to sell just everything. Just of late, everyone on Twitter has just been super bearish, and so like I say, I think I'm sort of sitting in between these sort of two phases. To get a bit more specific about that, this is the chart of the percentage of Nasdaq stocks, Nasdaq 100 stocks trading above the 50-day moving average, and that's sort of sitting at 55 at the moment. So like I say, we had this sort of low here in October, and this is sort of the twice yearly type event that I've been referring to. So we had another one in March, September last year, obviously pandemic, a few in 2019, and a good one in late 2018. So we recently just pushed off of there. Things like Cloudflare just went nuts. And when you get up to the sort of 70-80%, it's time to start being a bit more cautious. That's the sort of amber phase that I was referring to there. We have had a bit of a sell-off since then, and now we're sort of mid-range. Now my thinking is, well, this could state the obvious, could go up, it could go down. Quite often, this around here sort of does give you a bit of a tradable bounce. Alternatively, we could be on the way down to a pretty nasty sell-off. Everyone on Twitter seems to think we've got another big flush coming. So who knows? They might be right. So my strategy for this is the same as what it was a few days ago. I'm going to be conservative. I'm going to stick to the FANG type stocks because the actual Nasdaq looks all right, and I'm going to try and stick to the very, very strong sectors, which is pretty much semiconductors. And there's also one or two others that I'll go through. In particular, uranium looks all right. So just jumping onto the index, I'm just going to stick with the Nasdaq. Despite all the news, it's doing just fine. So on the daily, had that sell-off a few months ago, sort of pushed it above that, sold off, but it's only sold down to previous resistance, sort of tagged the 50-day, and it's just been sort of chopping around from there. I don't see like a whole lot of problem with that. So So as I was discussing, the problem with the Nasdaq is you've got the top sort of 5 or 6 stocks, and then you've got everything else, and everything else is being sold off aggressively, and money's just moving sort of towards those FANG type stocks. So I'm going to just stick with that theme and yeah, try and keep low risk bets in FANG stocks, and like I said, plus semis and maybe uranium. I'm just going to jump straight into some of the trades I said I was going to do. Let's get my portfolio up. So the first one is, sorry, Apple. Now, I just reviewed my video. I did what I said I wasn't going to do. I actually sold the call options here. It was looking very extended, although I did say that on the weekly it doesn't actually look too bad at all, like coming out of a VCP type thing out of a pretty long base as well. So, to tell you the truth, I might have sold that a bit early. Though certainly sort of felt pretty nasty at the time, like big volume. Just scared of giving back profits, to tell you the truth. I said I was going to take profits or roll up the options a bit further up here. Now that, as it stands today, and again we had a green day, so it's easy to say this. I probably should have just stuck to my original analysis, but anyway, that was actually quite a good trade nonetheless. Speaking of not doing what I said I was going to do, DDOG, I actually sold it this morning here. Still a very scrappy looking chart long term. Obviously made a mistake on the daily. So like I said, my rules after this sort of market is to be selling strength and buying weakness, and I did the opposite of that today. But still a pretty sort of sloppy looking thing here. Saying that, it's sort of been in a decent, like a pullback here from this breakout, so I can still get back into this trade at some point. Anyway, I'm out of that one for the time being. Google, I said I was going to sell that, and I did. It's particularly wrong here, but it's sort of just meandering around the divergence there. And I'm looking for trades that can make me a lot of money. These sort of meandering type stocks can be frustrating because if it is sort of running out of steam, like happened with C, it's just so easy to see it sort of rolling over. The alternative is it's just sitting on just like a nice long base here, just getting ready to set up. So definitely won't write it off. Google's an amazing company. We all know that. So yeah, but I'm just not in that now for the time being. The other sale I did was Shopify. Sold it here. That was more of a stop loss thing. Again, so I wouldn't be surprised to see it sort of turn around and move along. But again, sort of drifting around, not doing a whole lot. And again, I'm sort of just trying to sort of focus my money on where I can make sort of multiple X returns via options. So, okay, what else did I do? The other one was, oops, I'm going to put this in. I executed on this one. I bought Facebook options. Broke out of this base here. Meandering sort of upswing, pullback, shakeout, back to the daily, nasty shakeout, but it's held at 200 AM. Yeah, so hopefully that one goes all right. So I bought January 2023 options. I'm going to do a separate video on options and how I'm thinking about what strike dates and strike prices to go for and trying to achieve the returns I'm trying to get, taking into account risk as well. But anyway, I bought those. Okay, let's go on to my other stocks here. The portfolio, semis are looking super strong. AMD's sort of just hit the 50-day tag that punched off that beautifully. Yeah, I've got options here, which is good. Now I mentioned that I'd sold my existing options and roll them up to more out of the money ones as a way to take profits off the table. But yeah, still got exposure there. AMBA, same again, another just great push off here. I'm starting to wonder if this is like a stage 3 type deal here. I don't know. It could easily be stage 2A continuation of this sort of BGU type action here. Maybe I should have been a bit more brave and buying it when the market was just looking terrible. But we'll see. I've got my exposure there again with options. I took out earlier profits, rolled them up into more out of the date options, out of the money options. Sorry, they're $300 strike, so sort of way out of the money, but give me a lot of leverage if this thing goes right. DDOG, still got the tiny trading in F45, stupid trade. HAYW. Yeah, I bought the options here, so I'm down on those. But who knows? What I found, if these sort of companies can sort of sell off. Normally, if they say the stop loss, you have to take your loss, and that's that. With the options, they might go down to fairly minimal value, but usually, tending to find you might as well just keep the options because they're so sort of low value at that point, and you never know, they can come good. So this thing sort of tagged on the 50. It's not overly convincing, really, but yeah, let's see how it goes. Shopify is gone. Silicon Motion is still hanging pretty strong, really. I think I've discussed in the last video. There might be a case to actually buy more of those. I haven't done that. Tesla kept tiny holding in Unity, which that was just the balls up of a trade, that one. Anyway, I got a very small sort of options exposure there, and just happy to let that run. I also said I was going to buy options on other semiconductors. AMAT, I didn't do it. I don't know why I didn't do it. It's looking really good, like nice long base, push out, pull back, still holding previous resistance. It's looking good to go, so I am going to buy options on that one. Sticking with the semis theme, NVIDIA I think is looking really good, so NVIDIA's a king. Had a huge BGU here, fluffed around, one shakeout, two shakeout, but tagged at 50, bounced off of there and holding that BGU level. So I'm quite keen on that one. The other one is Marvel. It's obviously we've already had a bit of run off saying that besides NVIDIA. BGU sold down to that level, sort of holding there. I'm thinking I might try and buy this one sort of around here. Got to be careful of how many semis I own. Don't want sort of too much in case the whole sector sort of turns down. So I'll probably buy like one or two, or top up one or two of the best looking ones. One that's a bit is uranium. So it seems like the 200-day moving average of late. It's been sold down there again, tagged off of there. Hit previous resistance there, sort of been holding that previous resistance pretty well. So I'm going to try and buy some options there. A few other stocks I want to mention. Roblox, talk of the town type stock. Had a really nasty down day in an otherwise good market. Probably this one, the implied volatility in the options is really expensive. But I think staying back, so I'm looking at the weekly here, it's holding that previous resistance there, holding its BGU level, holding at 50-day. So I kind of think it's actually looking all right. I'm going to have a play around maybe buying very short-dated options on this one, just given how bad a day it just had. So big change of character, obviously, lots of volume there. So it's like definitely stage 2, just a nasty pullback in a stage 2, but maybe that gives a stage 2A continuation buy. Trade desk is just gonna look at just on a longer term basis here. Big run, sort of stage 3 or even stage 4 here, decline, then sort of reset a stage 1, pushed out the BGU, pushed out nicely, got sold with many other things, but relatively speaking, this one's held up actually really quite well. So I might look to buy that one. Again, options. So I'm thinking like semis and the Facebook type stuff might be the easy one at the moment, because the growth sector in general has just been a basket case, and this is sort of in that bucket. So anyway, I'm just gonna have a think about that one, but it's good to see it's holding up. I think as an overall comment, this, yes, some of the work from home type stocks like Teladoc and all that could have been slammed, but there's been a number of others that have been sold off, but what looks to me just pullbacks from a stage 2 breakout. So I think we're seeing some stage 2A continuation buys setting up here. So I believe this falls into the category. Let's just look at the daily. See what I mean here? It hasn't sort of failed as such, this chart. On a similar note, Lucid, EV maker, I kind of think it's similar again. So stage 1, well, back to a stage 1 here, shakeout, BGU, change of character, massive volume spike, push out, flopped, but sort of holding its own there. So the problem with this one, I almost have to buy a stock because implied volatility is just through the roof. But anyway, that one's sort of back on my watch list here. So yeah. So in summary, themes are I've got a pretty low portfolio allocation because I don't have the sort of easy money environment. But it does appear that we've had, well, it's not appearing at all. We have had a decent sell-off in a number of stocks. However, some of those are holding key support levels. So I'm going to be looking to buy a few of those names that I mentioned. The portfolio allocation, like I said, is very small. So my position sizing and portfolio sizing needs a lot to be desired, which I hope to discuss in future videos. But just from a sort of tactical perspective, that's my view.